We've given this talk the rather alluring title of Advanced Approaches to Analyse Disability Income Experience. Those of you who know me may have seen my name and the words advanced approaches and thought something doesn't quite add up here. I can assure you that David is going to do the advanced bit and I will be giving you some background and maybe a bit of reasons and sort of the motivation behind the piece of work that we've undertaken. And welcome, first of all. I wasn't quite expecting such a large crowd. When I looked up 10 minutes ago, there were about 3 people here. I was thinking we'd lucked in, but no, I'm very happy that so many people have come to listen to us, or maybe they've come to listen to the later talks and we're just getting in the way, but I don't know. Some of you may not know what DI is, so before I start, just very, very quickly, DI insurance is simply a product that provides an income stream to individuals who've become disabled and who have bought the cover. It's a very common form of cover in several countries, in particular in Australia and New Zealand. It forms a large part of the individual insurance market. Unfortunately, in Australia, but not in New Zealand, I hasten to add, for the New Zealanders in the audience, which I've seen a few, the experience in Australia has been horrendous for a number of years in this product. And growing volumes of claims and lengthening duration of those claims has led to significant losses across the market. In Australia, the belief has been that this has been caused by problems with product design, but this has been difficult to test, and the reason for that is that the products in Australia are very homogenous. All the insurers sell products that look pretty much alike, and so testing whether it's one product design or another has been very hard, and so generally decided that maybe we could have a look at it slightly differently and extend a review of experience across a number of countries and see if the differences between those product designs across those countries were linked to the experience in those countries. And I forgot to change the slide, so apologies. So we've analysed product designs across a number of insurance providers in each of those countries. So we had a number of insurers provide to us their data, and then we've analysed that data as well to look at the claims experience. And the idea being that maybe we can find links between the product designs and the experience. So how have we done the work? The first thing we've done is designed a benchmarking tool to analyse to look at the differences in the product designs. This was something we created in Australia originally. One of the consequences of the disastrous experience that we had in the DI market was a regulatory intervention that required insurers to make significant changes to their product designs and to launch new product designs by 2021 at the latest. And so this tool that we designed helped us and our clients understand the materiality of the product changes they were proposing and allowed them to compare it against what we called an ideal sort of benchmark product that they could compare to. So for the purpose of this piece of work, we've extended that product benchmarking to other markets. So as well as Australia, we've looked at products in New Zealand, in South Africa, in the UK, and in Canada. And we went through the process for all of those countries of benchmarking those products. So we extended the tool. We had to add a few extra features to enable us to do that. And we've scored products in other markets in exactly the same way as we did in Australia. And I'll explain a bit more about that in a moment. David has then studied the claims experience across the same set of insurers. And we thank the insurers that provided their data for us to do that. So he's collected and ingested claims experience from all of those insurers. And he's going to present an overview of those results. Now, we do have a paper, so the presentation today will be not much more than an overview of the results because there's a lot of detail in those results. So if you're interested, the paper has a lot more detail. Okay, so then to explain the product benchmarking. So the notion that we're trying to capture with the product benchmarking is product sustainability. So what does that mean? So we're looking for products that perform as expected by customers, that provide premiums for customers that are affordable and predictable. And I note in that context that in Australia, premiums are not guaranteed, and customers have seen very significant rises in their premiums across the last few years. That's in-force customers who have seen large increases in their premiums. And also sustainability for insurers means a sustained ability to actually pay claims over time. So in the design of the benchmarking tool, we came up with 75 different product features relating to things like the proportion of the income that can be insured and how long the benefit is paid and so on. And I'll show you some more of that in a second. And for each of the factors that we looked at the possible settings for each of those factors. So for example, for product benefit duration, you could have 2-year benefit, which would be very sustainable, or you could have a lifetime benefit, which experience has told us is probably not so sustainable. And for each of those settings, we allocated a score, so 0 for the least sustainable, up to 5 for the most sustainable. And then for each of the features, we assigned a weight. So the weight was our view of how important that particular feature was in determining the sustainability of the product. And then we combined those weights and those scores for each product to come up with an overall sustainability score, which was benchmarked to 100 if it was equal in sustainability to the benchmark product that we had designed ourselves. Now, I recognise that this process is highly subjective. It ignores lots of things. It ignores interactions between different features that might together make something more or less sustainable. But we feel it was a reasonable guide in the end to how sustainable a product was. So we took those scores and we've used them as inputs to the later data analytics work that David has done to look at the claims experience. To give you a guide of the scores by country, so noting that 100 was this kind of ideal score that we didn't really expect any product to ever score, but it was like a perfectly sustainable but not particularly commercial product design. For the old products in Australia, so these are no longer sold, but these were the products from where the experience has been drawn, the average score was around 30. In Canada, the average score was around 45. In New Zealand, also around 45. In the UK, the average score was 60. And in South Africa, the average score was 70. And I note in South Africa, most of those products are accident-only cover and have short benefit durations. Okay, and here's a simplified example of the product benchmarking. So these are not real products, but just to give you an idea of how this works. So you can see here some of the categories. So we have disability definition. So how does you determine that someone is disabled? So product 1 in this instance is a fictional product. That might be own occupation. And for product 2, activities of daily living. For the insurable income category, product 1 might be agreed value, meaning that the benefit amount is set at the outset of the policy and doesn't change. Whereas product 2 in this case is indemnity, meaning that the ultimate benefit depends on the customer's immediately pre-disability income. Income replacement ratio is simply the benefit divided by the pre-disability income, so 75% for product 1, 60% for product 2. Offsets are an important one, so these are what other forms of income, what other sources of income do we deduct from the benefit before the benefit is paid. So in this case here, we have sick pay being deducted in one case and not being deducted in the other case. Core benefits, the key one of these is how long is the benefit paid for, and we've chosen 5 years and age 65. Whether or not the benefit increases in payment, and so you could, for example, have a payment that is fixed over time or a payment that is indexed, in this case with CPI, which is the inflation index in Australia, and what ancillary benefits are provided. So in this case, we've said there's a waiver of premium benefit or no waiver of premium benefit. There's a whole range of other ancillary benefits that may or may not be included. And so in this fictional case, product 1 scored 77%, and product 2, which had the very restrictive definition of disability, has a 100% rating. So that's how we did the benchmarking, and as I say, we took those scores for each of the products in each of the markets and used those as an input to the later experience analysis that David has undergone, which I'll now get him to talk about.
Thanks, Matt. I must say the product sustainability benchmarking exercise was quite useful for me because it helped me understand the different product features within the markets, and in understanding these features, I was able to really see if the model results were intuitive or not, which is critical in any piece of actuarial work that I would like to do. So I will be quite brief because there are time constraints. I can speak for hours about the approach, and if you want to, please come see me at the booth. I will be here. I'm also very keen to make a few friends. So. So essentially, with the approach, what we would need to do for disability income is adjust for reporting delays, and we do have some techniques to do that. And then we go into the modeling. I don't focus on the modeling in this presentation. I focus mostly on the results and on the benefits of the technique that I use. Okay, so if we look at the results, the structure that I've followed is that of a typical disability income experience investigation. So I start with raw rates, and then I start adding layers of complexity. So you'll see I did a one-way actual versus expected analysis. I do some modeling, I compare the modeling results, and then once we've done all of that and we can trust the models, then we can start looking into the insights that we see, and that's where I'll focus some time. What's important is disability income experience is quite complex, and what we are looking at is product features and product design, and we're looking at the data that tells us what the features are and what the resultant experience is. Not only features influence the success of a disability income offering, so it's important to acknowledge that there's a range of stakeholders involved, and stakeholders' actions can influence the product as well. Okay. So the modeling technique that I used is called lasso regression, and the reason I use this technique is because it has a range of benefits. What is quite nice is it addresses a multi-collinearity challenge by applying cross-validation. It introduces a penalty parameter, so that results in simpler models. The output is quite easy to explain because it's in a similar format to that of a generalized linear model. And then the penalty parameter with cross-validation helps us limit overfit when the data is not credible. What is quite nice as well with this technique is it's a machine learning algorithm that helps remove some judgment that would have had to be applied during the data preparation stage for other techniques. Okay. So I'm going to show the crude experience on the next slide. And what's quite important when we look at crude rates is it's important to understand that we have not controlled for differences in the population. Essentially what that means is if we look at the graph by country, there might be a different age and gender mix within each country, and there might be a different combination of products within each country, so we don't really know what may be driving the differences in experience at this stage. Okay. So this is the crude graph, and what we do see generally is Australia does have the highest claims inceptions compared to other regions, particularly for male lives, and the lowest claim termination experience. As I mentioned, we haven't controlled for certain features. So for example, if you look for UK, we do see very low claims inceptions experience, and this is because the UK has a larger proportion of longer deferred periods in their markets. So I'm using the terminology deferred period here. I know some markets refer to it as waiting period, other markets refer to it as elimination period. Okay, and now we can really start going into the analytics and seeing, what influences these results and where are these differences coming from. So the first step would be a traditional actual versus expected analysis. And what we do is we compare the actual results versus an underlying expected basis. And I used the Society of Actuaries individual disability income tables for this analysis. We did find that experience was very different to the underlying Society of Actuaries basis. There was a very different gender shape, which indicated that in the US, disability income offerings do pay for some benefits that would not be offered in other regions. So an example of this could be disability income benefits for complications experienced during pregnancy for female lives. We also, if we look at the terminations experience, what we did see in this analysis is Australia was the only region with an actual versus expected ratio of less than 100%. So we knew that the underlying expected basis wasn't representative of the experience, and that normally gives us an indication that we would need to apply some modeling. As I've mentioned, we used lasso regression for the modeling, and we did an actual versus predicted analysis to assess whether the model fits well or not. The good thing is the actual versus predicted ratios were near 100% for all the rating factors, and what that tells me now is we can rely on the model results, and we can start going into the insights. If we know we can rely on the model results, there's one step that we still need to do, and that step is we need to standardize the portfolio and then apply the model on the standard portfolio, and then we can start going into what the models are telling us and start understanding where differences in experience are coming from. Okay, so what I do is I create a standard population, and I score the model for that standard population, and I've shown 3 graphs where we can start understanding different features and you know, where the differences are coming from in different markets. As Matt mentioned, sustainability score was one of the things we looked at. And generally, what you see here is the graph on the left is higher claims inceptions for your products that are less sustainable. And what is quite interesting is there's less differentiation on the termination side. We thought that was interesting, so in the paper we did look at the graph on the right by deferred period or waiting period, and we do see some differentiation if we separate it out into shorter deferred periods versus longer deferred periods. What this indicates is some differences in accidental versus sickness claims, which some markets do interrogate separately. If we look at the model output by country, what we've done in this graph is we've removed Canada because the results are standardized, so we don't want to give away the results of individual participants, and there were only 2 in the market. And here you can see the graphs are very different to the crude rate graphs that I showed earlier. So Australia still shows the highest claims inceptions and the lowest claim termination rates, so that indicates higher claims costs. But we do see some differences between the markets, and UK isn't such an outlier compared to the different regions. There are differences by gender as well. So for example, if you look at your terminations experience for New Zealand, you can see higher terminations for male lives compared to female lives, and this is coming from accidental claims that have been seen in the New Zealand market. On the UK side, we see higher claims inceptions for female lives compared to male lives, and that could be due to a range of reasons. So it could be different occupations that are dominated by females. It could also be a result of different hobbies in different countries, or any other range of factors or hypotheses. Okay. Lastly, what is quite interesting is we looked at the results by occupation class, and we see higher claims inceptions for your more manual occupation classes. Those would be occupation classes 3 and 4. And this is the overall claims cost is somewhat dampened by higher terminations experience, which is the graph on the right. Okay. So what we've done now is we've taken your crude graphs, which are quite difficult to interpret. We've applied some techniques, and by standardizing the portfolio and looking at what the model's telling us on a standard portfolio, we can start understanding where differences in experience are coming from. So this has a range of benefits. I think advanced techniques have allowed us to compare different countries, and we can identify areas that show similar experience. We can combine that experience and boost credibility where appropriate. What is also quite nice is if we are introducing a new product feature, we're able to look at different markets and understand how that product feature may have performed and make better decisions there. We can also highlight key risks if certain features have been deemed undesirable in certain markets. We can identify that from the analytics. And what is incredibly important is we're able to better differentiate between features that would be homogeneous within a country by comparing the features between different countries. So if I were to bring it all together, I think an important statement that I'd like to emphasize is disability income experience is incredibly complex. We can understand the features and we can understand the product design, but there are so many other variables and factors that could influence the success of the product. Lasso regression can help us generate key insights and help improve our understanding. And a few of the insights we had identified here was lighter experience was seen for your more sustainable products. We did see some country experience with Australia having the highest claims costs, And then we also saw some insights relating to occupation classes with heavier inceptions experience for more manual occupations, which was somewhat offset by higher terminations experience. I think one thing with these studies as well is it's important to acknowledge the generosity from the participants. I think this kind of investigation would not be possible if people didn't contribute their data. So I'd like to use this time as well to thank all of the participants for providing data for the study. Thank you.
Well, thank you both for a very informative presentation there. We'll just pass it on for questions. I don't see any through yet in the app, so please, if you do have any questions, please feel free to jot them down. I thought it was really interesting. I've got perhaps one question to sort of kick off here. It was interesting to see, personally, it's pretty cool that you've managed to standardize by, product generosity, if you like, or sustainability, which is pretty amazing. And I think reading the paper, even when you do that, you still see, well, Australia's pretty bad, right? And even when you adjust for product terms, it's bad. So any thoughts on, are there other factors at work here? Is it environmental factors, do you think? Is it because, the view of insurance, insurers are viewed in a negative light these days, and is there more propensity to claim, do you think, from Australians? Just any thoughts from you on why Australia is so bad compared to the rest of the world?
I know the Kiwis have some thoughts on it, because it's obviously been a concern of theirs that with their very similar products, they might see similar experience, and that hasn't been the case. And if you ask them, they would say that there are cultural differences that might be explaining what goes on. And so whether that's true or not, I don't know. I don't have evidence for it, but it's certainly a question that you might ask.
Okay, thank you. Any more questions coming on this one? No, not seeing anything from the audience. Quick one from me. Terminations for South Africa were pretty good. I think you mentioned something to do with is it the product design? Is it the features? Is there anything else at play there? Is it a totally different product?
Yeah, I found South Africa particularly interesting. What I've seen from speaking to our underwriters is a lot of active claims management, and it's sort of tiered by duration in claim. So for your higher sums insured, for your longer durations in claim, there's regular reviews and almost encouraging people to return to work. One thing that is also quite different in South Africa is there's very high interest rates. So if you're getting a monthly benefit that isn't indexed, in real terms, that monthly benefit won't mean much after a couple of years in claim. So that also influences your terminations experience.
Just one thing that might be interesting, we haven't done it, but it might be interesting to add to this study would be if we could perhaps measure differences in how claims are managed in some way, so whether it be caseloads or what other metrics there might be to sort of compare there, if people were willing to provide that information on a sort of basis that they were comfortable with, then you might be able to see, is it claims management that makes a difference.
Interesting. I guess there's lots of different effects you could look for.
Yeah.
We have got some more questions coming through now. So one question here on, is it possible to provide insight into the pricing impact of the reforms, IDII reforms, introduced in Australia? How much of a reduction in claims can we expect? So there's a tricky question.
That's a very tricky question. I'm not going to try and answer the how much claims reduction to expect. I mean, we have our views. I guess we'll see if they are borne out in the experience, which is too early at this point. In terms of pricing impact, and I'm thinking back to 2021, my recollection is that new business pricing did not change much at all, which I think is a sign not that people thought the claims experience would be the same, but that they recognised that their existing products were still underpriced even at that point. So I think so the immediate impact has been on new business has been minimal, I think, but at the same time there have been ongoing increases to in-force products, which are the old product designs, which suggests that there's still some way to go there, and I think that the view anecdotally seems to be that there is still further increases on the old product designs required. So within a year or two, you might see some quite significant gaps between in-force old products and new products.
So hopefully some good news to come on the new products. Thank you.
Yeah.
Another one interesting, a technical one. Could you clarify how cross-validation was used to deal with the issue of multicollinearity? For you.
That's for you, David.
Yeah. Yeah, so when we built the model, we essentially, so the technique allows us to use cross-validation while running the algorithm. So essentially what that means is with the technique, while the model builds itself, it has a separate holdout sample, and those are called folds. We had random folds, so while the model runs itself, it tests itself on the separate folds. And then it takes the best cross-validated model after that. So that's essentially how we applied the cross-validation.